What's up, everyone? Lord MC here. Hope you guys are all having a good weekend. Just wanted to give you guys your dose of harmonics coming into a very hot week in the market with CPI and FOMC data that will be coming out on Tuesday and Wednesday. So buckle up because this is going to be a very volatile week, and I will be giving you no BS, just straight harmonics and two case scenarios. But before I get into that, I want to preface by saying I am not a financial advisor. None of the things I say in my videos or anywhere else is ever financial advice. So question everything, do your own research, and come out with your own conclusions. So having said that, let's jump right into the SPY. The SPY this week had a very choppy week. It was trading a lot, consolidating, except for Monday and Tuesday, where it did come down a bit from terminal here at 407, but it's been trading the past couple days between that 396 and 394 area. On Friday, it closed at 393.28, and on the SPY here, we have a bearish shark pattern. This bearish shark pattern, from the looks of it, at the completion of point C, looks like it's coming down to do a type 1 reaction. A type 1 reaction would bring the SPY here to 379.06, and in the best case scenario for this pattern, this type 1 reaction to complete, you could expect target 2 at 355 should that come down. Now, in the bullish case scenario, if you're going long and if this does not complete that type of reaction, you would have to have support here at the 50 EMA where 390 is. And then you expect a type 2 reversal back up to terminal 407, and then 420, and then possibly hop at 429. Obviously, that is going to be dependent on what FOMC and CPI data comes out, if it's bullish or bearish. But I'm going to bring here my drawings. Bear with me here because I know there's a lot. Coming into Monday, I do think, for those of you who have been watching me for a while, you guys know that 396.13 and 393.84 was a range here that the SPY has been trading on in the past and as well as this week. A lot of chop between these two levels, and unfortunately 393.84 was broken down on Friday at the end of close. So the next level that I see possibly SPY trading in coming to Monday, maybe before CPI comes out on early Tuesday morning, is 393 to 390. Coincidentally, that's where the 50 EMA is. So if you do lose 390.19 here, this is a previous harmonic level here, if you do lose that, you are going to come down and possibly enter that gap and maybe fill it down the line, right? So obviously, I do think that is going to be dependent on CPI and FOMC. But in my opinion, I do think we might be able to test on Monday 390, if not 391 here. The 50 EMA will be support. For the bulls, if you want to continue pushing up, you definitely want to stay and get above 393.84, in which case you could possibly look to test 396 again. Obviously, if you could tell here, this range here that it's been trading at, it's very important range here. Back in May here, obviously we broke down from it, we came back up, and then we went all the way down here to May lows, and then we broke out of 396 and we pushed up, and then again we got June lows when we broke out of this range, and the same thing over here when we went to August highs. So this level here, we did break out of it. The last point of support here, Harmonic, would be 390.19. So if the data is bearish, in my opinion, you are going to get that type 1 reaction, in which case if you lose the 50 EMA to 390, the next level of support would be 383 and then 379. Losing 379, in my opinion, would be very bad for the market, in which case we will probably see 355 and possibly start creating or testing the October lows. Bring this back real quick. So for the bulls, if bullish data does come out positive, you definitely want to get above 396, 396.13. In my opinion, if you get above 396.13, the next level of support would be the resistance would be around 400 and 401. In which case, you are going to come back and test terminal at 407.68 and do that type 2 reversal up to possibly 429 should the data come out bullish. Obviously, you're not going to come up all at once in one go. You're going to have resistances on the way up. Some of those being, you'll first have resistance here at 401, and then possibly here at the top of the descending broadening wedge around 404, and then this trend line here that I have drawn from the 2009 lows, which would be around If it's this week, possibly around 408. So that's kind of where a terminal is. If it's the data is bullish, I wanted to come over here and jump on the weekly just to show you guys something that's interesting here. On the weekly, we do have a bullish deep crab. At the completion of point D, this went and did a perfect type 1 reaction up to target 1 at 404. Now, in harmonics, you expect a type 2 reversal, type 2 reaction now, and it is holding just above, I believe it's a 13. Yeah, it bounced off the 13 EMA here at 391.41. Should you lose that level here, you are probably going to come down to test the 200 EMA here at 369.27. Obviously, I do think that can happen if the data comes out bearish. If the data comes out bullish, you could potentially start looking to test 410 and then possibly complete that type 1 reaction up to test target 2 at 433. It is going to be a very volatile week. It is going to be interesting what that data what the data says. I do think, in my opinion, if we don't hold this 13 EMA on the weekly, we are going to start coming down. We are still in a bear market, but we will have to see. If you guys don't want to play into FOMC and CPI, I suggest you sitting on the sidelines, just waiting for the chop to finish and for the volatility to finish. And then once the market picks a direction, you can go along and play alongside of it. But those are your levels. So stay vigilant out there, because I do think this is going to be a very, very important week. Jumping over to the triple Qs here. Let me bring up. Okay, so the triple Qs here on the daily, from this butterfly, this bullish butterfly, it did a type 1 reaction. Now it's coming back down. It looks like a double top here. It got rejected off the 9 EMA, and you kind of closed on a inverse hammer candle. So if the data is bearish, you can come and test the 50 SMA here at 277, back down to 265.05 off XA, off this 1.27 off the butterfly pattern, and then back down to 256.86. Let me bring my drawings here. In my opinion, all these trend lines that you hear, the yellow ones, are specifically previous targets off of harmonic patterns. So if you do lose 276.85, which is kind of close where the 50 SMA here is, you are probably going to come and finish that gap down here on the triple Qs down to 268. You lose that, and you're going to come and fill XA and then 255.86. You possibly start testing the October lows. So if the data is bullish, you want to come back to 289, and then breaking 293, in my opinion, would be very bullish for the triple Qs, in which case you can possibly start looking at filling that gap and completing this type 1 reaction at target 2 at 306.39. Like everything, the SPY, the triple Q as well, the volume is starting to ramp up here. So it's this week is going to be very interesting. Jumping over to the Dow Jones, out of the 3 indices, like I said before, is the most bullish one out of the 3, because it broke out of its descending broadening wedge right here back in November. It broke out. It kind of actually went insane. Did a crazy move to back all the way up to 346, 347. You had a golden cross here, and it now did lose. It got rejected off the 9 EMA here on the daily. So if this is gonna back and do this did a perfect type 1 reaction up to target 2, which is insane, and it went above it. Actually, if we take this retracement tool here and figure out how high it went, excuse me, this went above the 100% retracement here. All right, so that's an insane move. Harmonically, usually at the 618, it's an area where it's overbought, and this thing went all the way above the 100% retracement. So in my opinion, it did need a cool down, and who knows if we're possibly, looks like it's getting that cool down right now. Obviously, with CPI and FOMC, should that come out bearish here, with the next levels here for the Dow Jones, is if you lose we're already below the 21 EMA here. So if bearish data comes out, you're possibly going to fill this gap here around 331, I believe it is 331. Come back down to 322, and further down the line, possibly test and fill this gap here, because there's a gap here at 311, and then come down all the way to hop here at 283, because it has yet to do a type 2 reaction back down. So obviously that would be a crazy move, but we will see what the data comes out. But jumping over to Apple here, Apple, out of the blue chip stocks, in my opinion, is one that has yet to fully start capitulating. I do think it's at a very crucial level here for Apple. You could tell on Friday it bounced off of this 140.57 line that I have here. So on the daily here, if I remove my drawing so we make it clear, this did a type 1 reaction up to target 1. It got rejected. It went past the 200 SMA and got rejected. And it's kind of doing right here like a double top here, right? Maybe a triple top. So bearish data comes out. Excuse me. You can expect Apple to go to 138.60 and then 127.80. I do think losing 127.80 would be very, very crucial for Apple here. But let me show you real quick the 1 week. I believe it's the 1 week. Yeah, the 1 week we got rejected off the 50 SMA, 50 EMA here. The next level of support would be the 200 EMA here, which is around 119, 120. I do think we still have some room for that, but let me bring out my drawings. So I have these drawings here. Like I said before, these yellow trend lines here are harmonic targets from prior harmonic patterns. So should you lose 140.57, you will come down and fill this gap here, exactly where XA is at 138. And then losing 137.69 here, in my opinion, you will start to be trading in this range between 137 and 134, which coincidentally is also where the completion of point D is off of this bullish bat pattern. If you lose, I think this is a key level for me for Apple, 134.37. That would be very, very important key level for Apple to lose, because you are going to come down to test hop at 127.80. And then there is a lot of things with Apple going on. I do think out of like Microsoft, Tesla, Meta, Amazon, it's one of the few that have yet to actually come down significantly compared to the others. So there are a lot of gap downs here on Apple. I don't think, or who knows, there's a lot of gap downs even up to like 57. I don't think Apple will get there, but definitely if the data comes out bearish, I do think like we could potentially see Apple in the 120s, but we will have to see for that. Jumping over to Amazon here. So Amazon did a type 1 reaction off of this bullish bat pattern and is now doing a type 2 reaction. It was way below hop here at 96.31. It does look to me very weak, Amazon, like it still has further downside. I have this level here at 88.09. Should you lose 88.09, you are probably going to be trading in this range or even possibly consolidating between 81.30. 81.30 would be a level here where if Amazon loses 81.30, you can come back down to maybe seeing Amazon back in the 70s to 60s. So if it's bearish, you're probably going to come down to create a lower low on Amazon if the bearish data comes out negative. But if it's bullish, you definitely want to come back, bounce off of you're going to have support here at resistance at 94, and you don't want to get up above 96.31. For the bullish case scenario, if you break 96.31, you can maybe potentially start seeing and closing that gap up here at 110. But we will have to see if that is going to happen. I do think Amazon looks very weak right now, and it looks like it wants to create lower lows here. So we will see. Jumping over to, let's do Tesla here. So Tesla is also looks very bearish in my opinion. It looks like it did a double bottom here, and it's finding some resistance here at 182. It did close up above 179.05. You do have a lot of volatility coming in, a lot of volume that came in on Friday, but I do think the bulls weren't able to push it up above 180. If I bring my drawings here, I have these two lines here. Should you lose 164, 67, you're possibly going to come back down and fill this gap here between 144 and 138. Harmonically, if I jump over to, I think it's a 2-day or 3-day, this out of the way. Let's do the 3-day here. The 3-day has a bullish Gartley, right? At the completion of point D, it didn't do a type 1 reaction to 267.80. It's actually consolidating right now around XA here at 188. And it looks like it's trying to do a type 2 reaction, which would take it down to 113.12 where hop is. Obviously that could only happen if data is bearish and the market goes back into to a bear market here, because we do have a death cross approaching here on the 3-day. So the death cross, the 50 SMA is a yellow, and the 200 SMA is the red line here. So it looks like you got that on Friday. Yeah, they did cross. Now, obviously, I'm not going to give too much weight on the crossovers here, but if it is to play out, it'd be very very interesting to see how further down Tesla can go down to. In my opinion, has last level of support here before any. It would be 164.68 as a level of support, where in my opinion Tesla needs to hold. If it doesn't hold, you are going to come back down to get that gap fill around 138. On the weekly, I believe that is where the 200 SMA, actually no, the 200 SMA here is around 163. So that would be a level that I think you could possibly test if it's bearish. The data comes out bearish at 163. You lose that 200 SMA, you are going to come back and test new lows here on Tesla. So keep an eye out on that, because I do think Tesla looks still bearish. On the weekly, the volume came in higher than the previous to the sell side. So it is finding support here at that level here that I have at 177.12. But if you lose this 200 SMA, I do think Tesla, you could see this like at 150s and then possibly 140s. But we will have to see. What was the other one? Oh, Microsoft. So jumping into Microsoft here. Microsoft on the 1-day here has this ABCD pattern. It did a type 1 reaction here, and it's holding up and got rejected on Friday at 248.70. It is in this range here between 248 and 245. Should you lose 242.50, in my opinion, that will be bearish for Microsoft, in which case you'll have the next level of support will be 238, and then you possibly fill that gap between 229 and 234. And if you lose that on bearish data, you're going to come back down and finish that type 2 reaction all the way down to hop at 210. For the bullish case scenario, if the data is bullish, you definitely want to break 248.70. You break 248.70, you could possibly see 256, and then test the 200 EMA here at 260. As you could tell why this level here, 248.70, is important. Just jumping back from here, back in April 21, when we broke this level, we went up all the way up to 263, and when we broke down from it, we came back and we traded in this range. And when we broke out back in June, this took off and tested all-time highs. So as you could tell here, that 242.50 is a key level here for Microsoft, where we came back down, retested it, and we bounced off again, and we got that August highs again. And then back in September, when we did break out of this, we got the October lows. So we are in this range here, where I do think whatever the data comes out, if it's bullish, we're going to break out of this. And possibly do a type 1 reaction to 256, and then 278 for a perfect case scenario off the type 1 reaction, or if it's bearish, we are going to come down to maybe hop at 210, but we will have to wait and see if that is going to happen. So that is all I have for you guys. Like I said, if you guys don't want to play through Monday and Tuesday and Wednesday, I suggest you just wait until the market picks a direction. Once the market picks a direction, follow the trend, because it is going to be very volatile. It's going to be very choppy. I think tomorrow is going to be very choppy, and then Tuesday and Wednesday are going to be big days. So it's okay to sit out, just let the volatility play out, and then you can pick a direction and then go from there. But other than that, that's all I have for you guys. Unfortunately, I will not be able to stream tomorrow, but I will be probably getting in for the first 30-45 minutes. But other than that, I will be streaming on Tuesday for CPI and Wednesday for FOMC. So if you like this type of content, please consider giving me a like, subscribing to the channel. It does help me out. Again, I'll be streaming up on Tuesday if you want to follow me there. The link to my Twitch is on the description box. But other than that, I hope you guys have a good rest of your night, and take care, everyone. Peace.